listen, I want to get to it, and I want to talk about these rates and how they affect you directly, because I think this is really important for us to understand. Because if you're watching the headlines right now, if you're watching the headlines about Donald Trump, about Jerome Powell, about interest rates, about the Federal Reserve, mortgage rates are coming down. And people are sitting around still asking, should I wait? So let's be very, very clear, because rates are coming down. And we'll talk about what happens when rates are coming down. And if you don't understand how the system works, it will work with or without you. Somebody's going to benefit, and you need to be the one that's actually benefiting. Okay. So when Donald Trump is talking about stimulating the economy, one of the fastest ways to do it is through housing. Housing is the number one wealth builder, and it's when it moves money really fast. It's the quickest way that you can grow your money and not blow your money. Now, I looked at these mortgage-backed securities, and I want to talk about it because a lot of people don't really understand what's happening with the mortgage-backed securities, and that's a way that Donald Trump has been able to reduce rates without having to go through the Federal Reserve, without having to wait for Jerome Powell to reduce the interest rates. Okay. So I don't want you to get it twisted and thinking that he's doing this for y'all. He's doing it for this. He's doing this for his rich people. He's also doing it because he wants to make sure that, he gets that the Republicans maintain the House in 2026. And that's, whatever he does, we need this man out of office. So I don't care what he does in terms of stimulating the economy in any way. There's a whole bunch of other shit that's going on that we have got to make sure that he gets out of office. And it's crazy what his followers, like, they are, the conditioning is crazy. The consonant dissonance is crazy. But I do want to show you how you can actually benefit. Okay. So let's talk about interest rates and mortgage-backed securities. So basically, when you get a mortgage, the bank usually does not like to keep your loan. So they bundle your loan with other people's loans, with thousands of other loans, and they sell it in the secondary market. That is called a mortgage-backed security. Okay. So investors purchase these mortgage-backed securities. So when investors want these bundles, the banks feel safer lending. And when the banks feel safer lending, that's when the interest rates go down. All right. So in a typical market, it's regular business as usual. But when the government or the Federal Reserve steps in and buys those mortgage-backed securities, banks don't need to charge you as much interest to protect themselves. So then that's why rates end up dropping. Okay.